So my name's JJ, and the first thing I want to tell you is stop watching YouTube to get your advice on what you should do on getting into real estate. So how many here have already bought real estate? You own it besides your primary residence? I love it. You're gonna flip or you're gonna own?
We own our primary.
You own your primary?
Yeah, we're looking
Okay.
for a secondary.
You're gonna flip or you're gonna hold?
Looking to flip.
Flip, all right. How about anybody over here yet?
Yeah, we're gonna hold it, we're renovating it now.
Okay, okay. How many here already have their LLC set up? Boom.
Raise
Got
your
an
hand,
LLC?
Shane.
Nice. LLCs? You got one yet? So I'm a certified public accountant, as you can tell, right? Typical, got my pocket protector right here. See it right there? And I'm gonna tell you one thing, and I mean it in a good way, because when I go and do these things, you're like, oh, this guy's trying to get my business, you know. Here's the good news, I'm not taking on new clients. So why am I here? Well, my lovely bride-to-be here, Amanda, is with an Oklahoma. And I just love this group. Oklahoma is like no other, I'm telling you right now. They're a tight-knit group. Now, of course, I favor my bride-to-be, but Jennifer and Craig are amazing. I know you can go to other organizations, but the tight-knit group that they have, the connections that they have, I mean, heck, they know me, right? Brought me in. Of course, I'm having fun with you. I'm trying to get you guys to chuckle. But the key is, really first and foremost, is you're not a real estate professional by yourself, right? You want to have a team around you. Now that starts with probably the most important person would be this gentleman here, your banker. Because most likely you're not going to be in the real estate business without leveraging yourself, your assets, your dream, your future cash flow. So why did I ask if you have an LLC set up? Because here's the great news. All of you are going to be in business by Monday, if not tonight, because all you have to do is go to Secretary of State, select that you want a business entity, select liability company, LLC. You should be taking notes on this. I charge $400 an hour. This is worth it. With this being said, you want to have an LLC before you do anything. Why? Because first of all, you're in business now. You have an LLC. You're a business owner. The second thing you want to do is go get a tax ID number. Not that hard. IRS.gov. Online EIN. Do yourself a favor. If you are doing it yourself, put you're a one owner. Why? Because I told you, put yourself as one owner. You'll have no due dates. Now you have a tax ID number. What's the third thing you need to do? Go set up a bank account in your LLC name. Put 50 bucks in there, 100 bucks in there. Because when you then go to talk to this gentleman, you go to talk to the bank, what are they going to say? Well, do you have an LLC set up? Do you have an EIN? Do you have an operating agreement? Do you have a bank account? Because if you're here to do what I think you're here to do, it requires those three things to start. So, why is anybody getting into real estate? It's a rhetorical question. Right? You want to help people, you want to provide for your community, all that great stuff, right? Well, let's just be honest. It's to make money, I'm assuming, right? If we make good money, we take care of our family, we take care of our community, right? We take care of our renters, we take care of our banker, and more money leads to additional money. So what's the great thing about that song, Buy Dirt? For some reason, I just listen to it like 18 times a day. That's why I do it. Because God ain't making any more of it, which He said it. The value's going up. Now, what I want you to do is stop being emotional about it. Right? Oh, I feel it. Wrong. There's no feeling it in real estate. Why? Because Craig will tell you this. He's been in the business forever. He's the builder. Jennifer will tell you this. The whole team will tell you this. There's statistics everywhere. You can go to the Oklahoma County Assessor's website and see what it's sold for the entire history, what it's worth now, what the comps are, in terms of getting your beak wet. But then really, what do you want to do after all that? Right? You got your LLC, you got your EIN, you set up a bank account, you put 50 bucks in it, you talk with the banker. Now what do you want to do? You want to pay somebody that's not going to even charge you. You want to pay somebody that's not going to expect a dime from you. Anybody know who that is? Who's that person?
Realtor.
A realtor. Are you kidding me? These people work for free? Well, of course they don't. But if you're buying real estate, guess who's going to pay them? The person you're buying it from. I mean, this is the best resource you literally have. You should be already begging for cards over here because they're going to work for free, in a sense, for you. Now, they're going to get paid, but their job is to find a way for you to make money, and they're going to know it better than you. So I said, don't get emotional about it. Let me tell you, show me the money. It's all about it, right? So we get emotional about it once we start making money. But here's the other aspect. So you said you were going to flip. You said you were going to hold. So when you're an LLC, you are selecting your legal designation. All right? But that has nothing to do with how you're going to be taxed. I'm going to just tell you this right now. I had a mild stroke a year and a half ago, so I shake when I get excited. If you're going to flip, you want to be an LLC taxed as an S corp. If you're going to hold, you want to be an LLC taxed as a partnership. Why? Find yourself a good accountant. They'll tell you why. What did I tell you at the very beginning, though? I said stop listening to people on YouTube, except for one person. There's one person out there that actually knows what they're talking about. Okay? He lives right here in Edmond, Oklahoma. And his name is JJ the CPA. He's got 88,000 subscribers. So all I ask is before you leave tonight, go find JJ the CPA on YouTube. Only watch my channel related to real estate. Just kidding. But I also have, because I told you, I'm not trying to gain your business. Go to jjthecpa.com, jjthecpa.com/real estate. I threw together something real quick just for Oklahoma, but I just put on there 3 videos, so you don't really have to subscribe. It'll make me sad if you don't. But I put on there 3 key videos that expands on what I'm talking about here. And on one of them, I lay it all out. I got a spreadsheet, it's a PowerPoint, it's very homemade, right? But you're going to be able to understand it. It's about 20 minutes long. I've got 2 others from there. Why do you want to be an S corp if you're flipping? Because when you're flipping property, it's ordinary income. You do not get to take advantage of capital gain rates. Now, you could watch a YouTube video and show you how you can. But what I'm telling you is the IRS goes, no, you're a developer or you're in the business of flipping, it's going to be ordinary income, meaning it's not capital gain. Now, why would you want to be a partnership? Well, because you're going to hold, right? You're going to hold the property. So with an S corporation, if you own it personally and you flip it, you're going to pay ordinary tax. All that means is you're going to pay the same tax rate as you would on wages. Okay? But guess what else, right? Now, depending on if I knew you all a little better, I might not say this, but I feel like I already know you. But I mean, you get kicked right where it counts. Because they're going to add 15.3% tax, self-employment tax, to whatever your profit is. Where if you're an S corp, presto, it's not subject to that tax. Okay? Period, the end. Now, you're going to talk to some CPAs, accountants, and if they say, well, no, you got to pay yourself wages, go find another one, because they don't understand real estate, flipping, and what an S corp's for. So I just saved you 15.3% forever. Is that worth a subscription to my channel?
Yeah.
All right, love it. Now, with the partnership to hold, I think that the banks would want to hear this every single time. So always plan to be on the loan with your LLC. This isn't a play to try and skirt around your liability with the banks, right? Typically, they're going to want your name on that anyways, right? Now, this is not an advantage to an S corp, but you don't need this advantage because you're flipping, which means you're doing it quick. Now, you're holding, right? So in a partnership, if you're holding, you're passive. What passive means is you're not involved with it materially, which means that that net income is not going to be subject to self-employment tax. Yours is because you're flipping it. Yours isn't because you're just holding it. So you're already going to save the 15.3%. Why would you want to be a partnership in? Because in a partnership, very distinctly different from an S corporation, if you're on the loan, which the bank's going to want you to be on anyways, and you should be, you get what's called share of liabilities. Okay, very key. Because typically when you hold, you're going to have losses in the beginning. Now, I don't want to get too detailed, but for you to be able to have losses, you got to have skin in the game. Right? Anybody here watched Wall Street with Gordon Gekko? Right? I'm aging myself. No one knows Wall Street. I do. Thank you. All right. So I guess I won't go down that alleyway. But my point in saying this is that with real estate, everybody says, especially doctors that want to get into real estate, like, oh, I need some good losses. Who's getting into real estate for losses? No one. Okay? But there can be tax losses. How? Because of the depreciation rules, which means that you can get some upfront depreciation up front. But let me tell you the real strategy, okay? Hire somebody that's going to really strategize with you, because here's the real strategy. Stop trying to become a real estate professional for tax purposes. Because unless half of what you do during the year is in real estate and you spend more than 750 hours, you're not a real estate professional. Guess what? You already own an LLC. You already got a bank account. You're a real estate professional. You don't really actually want to be a real estate professional for tax purposes. Because if you're a non-professional tax designation, you actually get to deduct up to $25,000 in losses, okay, as long as you have basis. Whereas if you're a tax professional, everybody goes, oh, I want to be a tax professional because I get to deduct my losses. Well, that is something that, in my opinion, I don't care about IRS flags. So what? They come and talk to you. If you're doing it right, they're doing it right. But as a real estate professional, you're allowed to get your losses, but here's the real strategy in real estate. You don't really want to realize your losses to offset your other income. Be smart about this. What you want to offset is your future earnings from real estate, right? So you may have a job, you may have a side gig, you may have a side hustle, you may have a different business, you may be a doctor, another business owner, or whatever, right? Then figure out how to save taxes doing that. With this, if you have losses only because of it's the first year, you put a lot of money into it, you have depreciation up front, well, those losses can get preserved easily and just rolls to the next year and rolls to the next year. And then when you sell the property and or it starts making money, because you know what runs out? Depreciation. It's this big and then it goes to here. Same thing with the banks. You're paying more interest up front, but over time you're paying less interest, which means that you're going to recognize more income in the future. It's kind of what Craig was talking about. You know, the advantage maybe to go into a cheaper house is that it's not as much money to borrow, et cetera. But then, oh my gosh, now it's going to have a $2,500 sewer line that's got to get fixed. So when you're getting into real estate, you want to be smart, you want to really strategize, you want to harness those losses. Now, is it bad to take losses? No. But the clients that I have that are in real estate, we want those losses just to offset other future real estate income, okay? So what I'm trying to do is almost make this easy for you. Tonight, you set up an LLC, you have an EIN, tomorrow you have a bank account, you put 50 bucks in it, you're in the real estate business. You get a realtor, you get a banker, and then you're actually ready to invest, right? Either flip and or hold, improve, which is awesome, right? But then after that, what is the next steps in terms of strategy beyond the losses? So we don't need to worry about trying to be non-passive and real estate professionals, 750 hours and all that good stuff. The next step is eventually maybe you're selling. I mean, it could be 5 years from now, 10 years from now. You're definitely selling, right? So what you really need to examine is how can you take advantage of a code section called 1031. Anybody heard of 1031 exchanges, like-kind exchanges, right? Like-kind exchange is this. And guess what? Since 2018, it's now only available for real estate. That's it. You can't do this anymore like with vehicles or other types of assets. But when you sell real estate, it's got to be done carefully. You all are with the title company, right? Right? So you have to have a good title company in play, which means them, okay? Because you have to set this up before you sell. Can't do it after, can't do it at closing, it's got to be done before. The 1031 exchange is this. Ooh, I just made money, especially with you, right? Ooh, just made money. Do I want to pay tax on it now, or do I want to pay tax on it later? What is tax really? What would you say tax is if we were to explain it to a 5-year-old? It's money out of your pocket, right? That's what tax is. It's money out of your pocket. What's money out of your pocket? Less down payment on the next one. Less upfront, right? Especially if you want to get into doing flipping or other real estate. Don't get me wrong, you probably always want to leverage it. But at some point, you want to start using maybe a little more of your money. Or now I have more money and I can get 2 properties. Now I can get 4 properties. Now I can get 6 properties. So 1031 exchange does not eliminate the tax. All it does is defer it. I'm really big into kicking tax down the road. Now you can make all kinds of arguments why that's not a good idea. That's why you can't just listen to some guy at Blue Jays Rock and Grill that's also a YouTuber and take all this and run with it, right? But my point in saying that is that with 1031 exchange, it's going to allow you to defer the gain, roll it, okay? So talk with the title company about how that works, but it's really something that says, hey, instead of this money coming to me, and then I'm going to immediately put it in another down payment within 6 months, or within 30 days I'm getting into another property, why not let it sit at the title company under a 1031 exchange setup? It's about $1,500, probably worth it. Because that money's going to sit there and you're not going to lose, in your standpoint, maybe 30% to taxes. Or for you all, selling it and it's a capital gain, maybe it's 15, 20% in taxes. Don't get me wrong, you're going to eventually pay it somewhere down the road when you do your last deal. But once you get into real estate, right, you just want to do more of it. I want the next property. I want the next property. So I've got a client, and I only say this like in a way of getting the bug, but he's done 1 property a year, and then he's kind of added, and he's got $40 million in real estate, and doesn't know that much about it. You know what he has? First and foremost, one hell of a realtor. Now, I'd love to say it's with Oklahoma, but they don't do commercial real estate yet. But he has one hell of a realtor, and I'm not going to tell you who the name is because I hate the guy. But with that being said, I'm being serious. But with that being said, you know what he has next? Great relationships with banks, right? And then you know what it all started with? I'm going to take full credit. Was he got to know me in 21. We were officing right over there on Broadway, little building that's still kind of a crappy building right next to the post office, not the nice ones across from Evans and Davis, which I highly recommend for legal work. Right? He officed next to me. Of course, I'm having fun. He's a lifelong friend now. He's a lifelong friend. But he never even is a real estate professional. Like, this isn't even what he does. It's not even what he does. But we've done all of these things, and this is what you can do, because when he started, he made like 100 grand a year, which is great pay. And he's just built it up, leveraged, smart, surround himself with smart people. The other thing I'll just mention in closing is that you want to track all your expenses. So what did I just say at the very beginning you can be tonight? Business owner, right? Set up an LLC, you're a business owner. You got a bank account, got an EIN, let's go, right? I got a banker, I got a realtor, let's go. You know who the ones that lose money and they think they're making money are the ones that can't track their expenses. And on my videos, I just call them idiots. Right? This is an idiot business owner because they think it's cool, right, to not track expenses for some reason. Here's how I track expenses, literally. I've been doing this 30 years. This is how I do it in my practice, okay? I have a folder, and it's a manila folder. And I open it, and I put the receipt in it, and I close it. Okay? And then at the top it says January. Right? And then the next one says February. Guess what you can do? You have a manila folder. Heck, it could be one of those little ones that goes in your glove box, right? Especially if you're flipping houses, dirty, dust. And you label it, here's this house, and you throw your receipts in there. Okay? First of all, you gotta have receipts to substantiate anything with the IRS. You gotta show that your business paid for it, right? But the second is, you really actually wanna know, did I make money? Not pretend, did I feel? It's not emotional, either yes or no. Did I make money? But guess what else happens when you track your expenses? You will pay the least amount of tax. You just will. Because you're gonna have all your expenses there. Now, you're probably like, wait a second, if you're from YouTube, can't you tell us something sexy that might get me in trouble? Right? That's gonna really sound good? No, there's nothing. Here's what it is. I just gave you all the secrets. I mean, these are all the secrets. It's just doing it right, and it's knowing how the law works, and putting yourself either S Corp or partnership, starting with an LLC. Right? You have the liability protection, getting a realtor, getting a banker. And really with a CPA or a tax advisor or enrolled agent, come see me in 3 years because my son is on his way to becoming a CPA and he'll be bringing in new business, but not yet. But the last thing is that if there's things related to what you're doing, you can write those things off. And that's where it gets crazy, in the sense that you can go wild with your imagination. So this is what I tell my clients. Use the smirk test. Here's the smirk test. Well, I bought that laptop for my kid, but couldn't I use it for, see how I'm smirking? So if you're smirking about a tax deduction, it's probably not a real tax deduction. Right? Oh, I bought a motorcycle, I ride that every once in a while down to my rental property. No, you know what I tell my client? Because you said it just like that. Right? So my point is you're going to know. And guess what else? You know what a tax deduction is? It's the same as taxes. It's money out of your pocket. Right? So tax deductions is not necessarily where it's at. Where it's at is making money, profit. Because all a tax deduction is you deducting what you spent money on. So why would you want to go spend money if you didn't need to spend it? So what are you spending money on? Probably stuff related to your business. So the number one question I get, oh, can I write off my cell phone? Sure, I mean, do it, right? There's your sexy tax deduction. Write off your cell phone. So with that, I probably way over my time, but I enjoyed visiting with y'all. I like putting on a show for you. Hopefully I entertained you a little bit. Got you guys excited, but what I want you to be most excited about, for real, is that these folks at Oklahoma have put this together for y'all. And in some ways, you're right. They want your business, right? But don't you want to be with somebody that wants your business, right? So I'm going to be disappointed if somehow I'm with Amanda and I happen to run into you and you didn't hire Amanda or Chantel or any of these other people here. I'm going to be disappointed in you because I just saved you 15% for the rest of your life. I may have saved you 20% until your kids take advantage of whatever you put together. So my point is I really do want to thank Oklahoma for putting this together because this is unusual. Okay? And guess what? Is there fancy stuff we're giving out? Little bit?
$100 gift card.
Oh, well, there you go. So you're even going to benefit a little bit. I tried to give you guys $20, no one would take it. So with that being said, I'll open it to questions. You told me I was last.
We got Libby.
Oh, you should.
You should have finished.
I just totally hogged you. I was like, all right, I'm last. So I thought. All right, well, thank you. How about a round